Please visit tradingsim.com to simulate this trading lesson. Hey day traders, this is Al Hill from tradingsim.com. I'm going to talk to you today about the 100% retracement. This is one of the retracement levels within Fibonacci that most people just forget about because it's not as sexy as the 38.2% or 61.8%. But the 100% is just as good all the same. Today we're going to look at an example from Biogen, ticker BIIB, from July the 2nd, 2010. So we're going to take a from the high down to the low, and as you see here, the stock, let's put some volume on this chart so we can get a feel of what's going on here. Stock has some heavy volume to the upside, right? And really feels like climatic volume if you look at it. You're only 2 minutes into this and you're already blowing out volume from the previous days. Another thing to look at is that you're also feeling a gap here. Now, a lot of novice traders, rookie day traders are going to see this up 7%. They're going to think, wow, this stock's going to the moon. They're going to jump in long here. But this is where you don't want to get involved, right? You want to see how the stock performs at key Fibonacci levels, and we said this a million times in our other Fibonacci videos, but you don't want to just jump on board and or go counter to a Fibonacci level just because the price is interacting with that particular level, right? You have to see how well the stock performs and not just take it at face value. Oh, we're at 100%, so it's going to reverse or it's going to continue up to the extension level, right? 161.8%. There's no guarantees in this game. So as you see here, the stock's starting to wick a little bit, right? So you have a wick here. You have what we call climatic volume here, where the volume is considerably higher to the previous candlesticks as well as previous openings in the morning. And you have a high set here of 50.91, and as you can see, the stock is unable to get above this level. You can see that the stock is unable to make another high, and you're starting to get some red candles in here. So this is a great example where you're going to want to look to get short, and it's not really much more to it than that, right? I mean, you just want to see the stock failing. You want to see that the buying is slowing up. So now you say to yourself, well, the 100% looks like it's going to hold. So if you were to trade this stock, you would look to get short up in this area with a stop above the most recent high. So let's do that. Okay, let's short 2,500 shares of the stock at market. Alright, so average price of $50.13 short once you factor in commissions. So let's fast forward this a bit. Alright, as you can see here, stock is pretty much giving it up, and giving it up quite nicely, up approximately 2%, give or take a little here. And the key thing you want to look at, right, unless you have a per dollar target and or a time target, maybe you only want to hold positions for a certain amount of time. Another obvious exit point would be the next Fibonacci level, either up if you're going with the trend or down if you're going against the trend, right? So an obvious spot would be to get out at 48.50. So we'll put a limit order out here to buy back our 2,500 shares at 48.50. Alright, so now we have an order out here to buy back at 48.50. So let's fast forward a bit. Now, as you can see, we're up quite nicely, close to 3%, approximately $3,500 in this trade. Alright, now we're coming down in here. And as you can see, it's pretty much been straight down, right? I mean, this isn't rocket science, right? You're not looking for a home run here. You just had an entry point here with a stop above here with a potential gain down at 48.50. Alright, now we're coming in here. And a lot of times, stocks will gravitate to the whole numbers and 50-cent levels, right? So 48, 48.50, so you want to look for this confluence again, just like we look for on the upside, right? We were filling a gap here, um, filling a gap, here, right? Filling a gap, hitting the 100% retracement. You don't look for the same thing when you exit, right? You're hitting a 50-cent level, right? 48.50. It also pretty much coincides with the 61.8% retracement. So these are the things you really want to look for. This is what's going to help you better gauge exits and entries and whatnot. All right, there you go. We're out. 48.50. So this is pretty much it. 100% retracement. Remember, you cannot trade just strictly off the Fibonacci levels, but you also have to apply some level of smarts as well as a number of confirming or validation points along the way to ensure you're on the right side of the market. Good luck trading.